Hello, Money Mastery audience. It's Emma here, and today we're diving into an urgent topic that could affect all of us in the coming months. It's 2025, and President Trump has just announced a new wave of economic tariffs that will send shockwaves through the global economy. These aren't just any tariffs, they're part of a broader trade war strategy aimed at reshaping the economic landscape. If you're worried about your financial future, you're not alone. With rising prices, stock market volatility, and inflation on the horizon, it's crucial that we all take steps to protect our wealth, our businesses, and our financial stability. But here's the good news. During times of economic crisis, some of the greatest opportunities are born. The key is knowing how to protect your money and navigate these turbulent waters. In this episode, we're going to discuss exactly how to shield your wealth and business during this economic emergency. I'll be sharing practical steps and strategies that can help you not only survive, but thrive in the face of the coming financial storm. So grab a notebook, sit tight, and let's get started on how you can protect your money and business during this unpredictable time. First, let's break down exactly what's happening. In early 2025, President Trump has once again taken the reins of economic policy with a major tariff increase. The announcement came as part of his America First trade strategy, aimed at punishing foreign competitors, reducing the trade deficit, and protecting U.S. industries. But the stakes are high, and so are the risks. The new tariffs, targeting countries like China, the European Union, and others, have already sparked outrage on the global stage. From steel and aluminum to consumer electronics and agricultural products, almost every sector is affected. These tariffs are designed to make imported goods more expensive, incentivizing domestic production. The problem is that American businesses that rely on imported materials, as well as consumers, will face higher prices. The middle class will feel the squeeze, and businesses will have to make tough decisions to survive. While the trade war sounds like a distant geopolitical issue, it's going to hit you where it matters most: your wallet. Here's a quick look at the major effects of Trump's new tariff policies. Rising consumer prices. Expect to pay more for everyday goods. Everything from electronics to clothing could become more expensive due to tariffs on imported materials. Business disruption. If you run a business that depends on foreign suppliers, you're going to face higher costs for goods and services, potentially cutting into your margins. Stock market volatility. With international markets reacting to these tariff increases, we could see wild fluctuations in stock prices. Investors will be scrambling to adjust, and volatility could create both risks and opportunities. Inflation. As companies pass on higher costs to consumers, inflation is likely to rise. Your purchasing power could diminish if wages don't keep pace with price increases. It's not just the U.S. that's affected. Countries around the world are reacting to these tariffs by imposing their own tariffs on American products, which could slow down international trade and potentially lead to a global economic slowdown. But what does this mean for you and your business? It's simple. The next few months will be crucial for safeguarding your wealth and making strategic decisions. In the face of economic instability, the first rule of thumb is always to diversify. Whether you're a seasoned investor or just starting out, diversifying your assets and income streams is the key to mitigating risk. Diversify your investments. If you're invested in global stocks, you'll need to rethink your strategy. The tariffs will hit certain industries and markets harder than others. But diversification allows you to spread out your risk and avoid putting all your eggs in one basket. Here are some smart diversification strategies for uncertain times. Invest in commodities. With tariffs affecting global trade, commodities like gold, silver, and oil are likely to see price increases. These assets tend to do well when inflation is on the rise, and they act as a hedge against stock market volatility. Real estate. While the housing market may slow down, real estate is traditionally one of the safest long-term investments. If you own property, it can act as a shield against inflation. If you don't, look for opportunities to invest in real estate investment trusts, REITs, or rental properties that provide consistent cash flow. Local businesses. Tariffs on foreign goods could create opportunities for local businesses. Consider investing in or starting a business that caters to domestic demand for goods and services. When the economy faces turbulence, it's wise to have multiple income streams. Here's how you can protect your financial health. Side hustles. In uncertain times, having a side hustle can be a lifesaver. Whether it's freelancing, consulting, or starting an online business, additional income sources can buffer you from job losses or business slowdowns. Global income streams. If you have investments or business interests outside the U.S., make sure they're well positioned to handle changes in trade and tariff policies. Global income streams can act as a safety net. Remote work opportunities. As the world becomes more connected, remote work has opened new avenues for earning. If you haven't already, consider ways to leverage your skills in the global marketplace. If you run a business, the tariffs could dramatically change the playing field. However, with the right strategies, you can weather the storm and even emerge stronger. Here's how to protect your business. 1. Shift to domestic suppliers. Trump's tariffs will make foreign goods more expensive, but this also creates an opportunity for domestic suppliers to fill the gap. Look at your supply chain and assess where you can source materials and products from within the U.S. to minimize tariff costs. Negotiate with U.S.-based manufacturers. Work with suppliers who can meet your production needs without relying on imports. While this may increase costs in the short term, it will save you from paying tariffs and help you avoid disruptions in the long run. Support local businesses. By sourcing locally, you'll not only reduce costs but also contribute to strengthening the American economy. In times of rising costs, increased efficiency is the key to maintaining profit margins. Here's how to make your business more resilient. Invest in automation. Automating repetitive tasks can help you reduce labor costs and increase productivity. This is especially important if inflation drives up wages. Negotiate with suppliers. If you can't avoid tariff costs, negotiate better terms with your suppliers. Bulk buying and long-term contracts could help mitigate price hikes. Lean business model. Implement a lean model in your business to reduce waste and optimize resources. In uncertain times, every dollar saved is a dollar that can be reinvested into your company. As tariffs lead to rising costs, consumers will become more price sensitive. Understanding this can give your business a competitive edge. Diversify product offerings. Offer a range of products at different price points to cater to various customer segments. A budget-friendly alternative can help you retain customers who are feeling the pinch of rising prices. Focus on value. Make sure that your products or services offer clear value. This can justify higher prices if customers understand the benefits they're receiving. While the economic environment is unstable, there are still smart financial moves you can make to protect your wealth. The key is to stay ahead of the curve and adjust your strategy accordingly. 1. Build an emergency fund. In uncertain times, an emergency fund is your financial lifeline. Ideally, this should cover 3 to 6 months of living expenses. If you don't have one yet, now is the time to prioritize it. Liquid assets. Keep some of your emergency fund in liquid assets, cash or equivalents, so you can access it quickly if needed. High-interest savings accounts. Consider putting your emergency fund in a high-yield savings account or short-term bonds that provide better returns than a regular savings account. 2. Pay down debt. Rising interest rates and inflation can make debt more expensive. Focus on paying off high-interest debt, such as credit card balances and personal loans, to free up cash flow and reduce your financial stress. 3. Stay informed and adjust your portfolio. Keep an eye on the news and adjust your investment strategy accordingly. If the tariffs affect your stock portfolio, be ready to shift your investments to industries that will benefit from the new economic policies, such as technology, defense, and energy. During times of volatility, dollar cost averaging, DCA, can help you manage risk. By investing a fixed amount regularly, regardless of market conditions, you reduce the impact of market fluctuations on your portfolio. Finally, it's important to remember that panic rarely leads to smart decisions. While it's natural to feel anxious about an economic crisis, the most successful people are those who can stay level-headed and make clear strategic choices under pressure. The economy is unpredictable, and while we can't control the global trade war or the economic policies of powerful leaders, we can control our responses to those challenges. Focus on what you can control: your personal finances, your business strategy, and your mindset. In times of uncertainty, it's easy to feel powerless, but you have more control than you think. By taking action, adapting to the situation, and protecting your wealth and well-being, you can not only survive the coming economic storm, but also emerge stronger and more successful. So, I want to hear from you. How are you planning to protect your money and business in the face of the 2025 economic crisis? What strategies are you most excited to try? Let me know in the comments below, and let's keep the conversation going.